What's up, guys? Welcome to Backtest Fridays episode 8. This will be the final episode for a while as I'll be traveling a lot in the upcoming weeks and I'm going to shift my focus mainly to my students, my trading, making myself a better trader. Alright, so let's jump right into it. So as usual, we always start with the DXY. The DXY is very important. If you don't know why the DXY is very important to me, you need to jump back to episode 3 because I've explained that already. So let's move on. So over the past couple months, from about September 2018, we have been in an uptrend on the DXY. We've been pushing to the upside, but that all changed within the last 2 weeks when the DXY broke out of that channel. Yeah. With the DXY breaking out of that channel and actually transitioning within structure, that is telling us that the smart money within the market, the banks, the hedge funds, the big institutional traders are shifting away from the dollar and shifting to more tangible assets, safe havens per se. And one clear example of that is the massive bullish momentum which has come to gold, because gold basically went from 1278 and peaking at 1453. That's a good 100 and odd jump per ounce. So that's another clear indication that the smart money is shifting from the US dollar and moving into other safe havens. But without jumping the gun, let's go back to the DXY and break out some intraday moves that we could have capitalized on. So the first thing I took notice on the DXY over the past couple days is that it was developing a downtrend line along this area. So we have our point A, we have our point B, which created a point C. And at the point C, we did get a rejection pushing to the downside from that area, right? With that being said, as I say, if you don't know the correlations, go back to my episode 3, watch episode 3 first, and then this will make a lot more sense to you. So, with the DXY having a downtrend and having a downtrend trend line, sell off on the DXY will mean buys for the euro. If DXY goes down, euro goes up, right? So at this specific point where you had the point C rejection of this trend line, we had a major bullish push on euro to the upside, right? But flipping from the DXY to the euro, we can notice certain things as it relates to euro now. Now, euro for the starting of the month, starting of July, we had a level of support which was held for about 3 days. This support would hold for. That support was broken, and whenever we have broken support, we can look for it as future resistance. But before we even reach the H4 time frame, on the daily time frame, we have a demand region for euro all along this area. We had one tap of the demand. When the demand tap, we alter it to this area. So we can see that we have a clear H4 demand all along this area. So basically sideways movement with a one intraday trade within the mix. When the market rejected this level of resistance, it broke this level of support. Broken level of support can act as future resistance. So this is one intraday trade you could have capitalized on, this sell right here. But to be honest, I was not interested in that sell because I know the DXY is going down. When the DXY goes down, I know euro goes up. So I'm more interested in buys off this area. So you had one specific buy along this area. It was quite a nice buy, to be honest. Well, let's clean up all of these too much things on the chart. So the downtrend was broken when this level was taken out. When this level was taken out, a massive demand region formed on the H1. When price came back to that demand region, I highlight this area, this little area. Let's jump down to the M5 time frame. We had the market breaking roofs, creating floors, and gave us this region all along right here for entry opportunities. And we actually got the perfect entry opportunity all along this area. All along this area was something you call a bullish variation. I've spoken about this a lot. I had one bullish variation right there, another bullish variation right there, indicating that buyers are present within the order book. Like a lot of people always ask me, how we know certain things. But I always say this, from we're kids and we're going to like primary school, prep school, wherever we want to learn, teachers would always tell you that a graph is a representation of some form of data. So let me tell you the honest and raw truth. If you do not understand what that data is telling you, it don't make sense to be in the chart 24/7. Right? Data in the charts was data in the order book was telling us that buyers are heavily present along this area. Hence why you have the massive rejection. 62 pips to the upside, quick and easy. But on the flip side, remember, I said that euro was consolidating. Euro has been moving sideways all along this area. Yeah. So with that being said, we know that we have our buyers down here and our sellers are up here. So when we got this buy, we should be looking to take profit at this area, and anywhere we look to come out of the market is consolidating. We could have took the sell to the downside. I personally did not get the sell because the sell was quite weird. Let me show you why it's weird. Now, there are certain currency sessions, right? You have the Aussie session, Tokyo session, London session, New York session. New York session end about what? 3 o'clock. So between 3 and 5 is basically zombie zone because there's no real central bank. No major financial district is open them time there. But look at this specific trade right here. This trade happened at 1750 army time. See? In the middle of zombie session, they had a massive sell-off. Massive sell-off. Right? So that's a bit weird for me. So to really understand what's happened there, you have to really go find the news that happened. You see me? I don't know if I'm going to be able to find this and go so far back, show you guys. Nah, I'm not going to be able to find it. But basically what happened was some news about the monetary policy of the US dollar. They're saying basically they're going to do everything in their power to get rates up, which when interest rates go up, currency goes down. When interest rates go down, currency goes up. Yeah, little nugget right there. So this was a trade that I actually did not get to capitalize on from this level because this was an impulse push to the downside. There's no technical confirmation, right? That the level is there, the resistance is there, but before you take a trade at any form of level of support or resistance, you have to have technical confirmation within the charts, and I didn't see it, so can't capitalize on that. But if you really wanted to get in the trade, you could have got in on like the break of this level and then push to the downside, which wouldn't really be the best of areas. But moving right along, let's jump over to Aussie. Aussie is also displaying the same characteristics as Euro, as the market is now shifting from what was a downtrend to potentially an uptrend. Right? Euro H4 has been in an uptrend, but let me show you guys something now. This is important where you have to understand time frame correlation when it comes to trading. Now, this is the specific level that was maintaining Aussie dollar to the upside, right? Now, looking at it, we had a break right here, but that's on the H4 time frame. If we go to the daily time frame, it did not break this level. Time frame correlation, very important. So we could have capitalized on buys to the upside on this level right here. This is the first level set of buys you could have got for Aussie pushing to the upside. Could have got a second set of buys for Aussie pushing to the upside along here again. But the major trade that happened last week, taking it from the H4 standpoint, was right here. This level of support right here on the H4 is what was maintaining the uptrend. And as we can see, it did not break this level. Now, within all of this area right here, you had a trend transition. This is the Aussie buyer posted this week on my story, and it was quite easy. Now, this line is known as H4 resistance. Let's just label this line. Call this, H4 supports. H4 sub, right? We know that's H4 sub. Now, if we are at a level of support on the H4 and we see price doing this, let's draw it out. we see price making lower lows, lower high, lower low, lower high, lower low, higher, higher low. If we see a H1 transition within the direction of the market, you had a little trend line here. So also, if we see a transition, a break of this little trend line, that is telling us the market is going bullish. When the market went bullish, it came back to the exact area right here and gave us a bullish engulfing right on that area. Classic buys. This right here was probably the easiest trade I've ever taken in my entire life. It was just textbook. Put your stops down there, and we'll take it to the next level of resistance, which was somewhere along this area. If we go to the daily all the way over, this is the next level of resistance right here. So there's a nice buy. I think I got about 60 something pips on it. Yeah, about 64 pips I got on that buy. But moving right along, gold. Yeah, gold has been perfect. Now let me just put in some key information right here. This is maintaining gold's uptrend. This is also a level of support. This is maintaining a level of resistance along here. Let's put this as sell. You notice sideways movements, right? When it comes to sideways movement, you can always just take advantage of the buys and sells along this area. But in terms of what happened with gold this week, it was moving sideways. At the ending of last week, it broke this level of resistance right here. Broken resistance started acting as future support, and it gave us this H4 demand region. Like, yo, never sleep on supply and demand. The market work off of supply and demand, and only supply and demand. Everything else is just whatever. Supply and demand only. Along with supply and demand region, it gave us this downtrend line along here. So capitalizing on gold this week could have taken buys along this level of demand to the H4 level of resistance, and also you could have taken advantage of the break of the trend line and push to the upside to the H4 level of resistance. So both of these trades would have given you somewhere along the lines. The first trade would have given you 345 pips, and the second trade within this area would have given you 191 pips. Right, simple and easy. Let me jump down to the low time frame along this area and show you the trend transition that you should be looking for when you're taking buys. It's always going to be the same. It will never change. It will never change. Let's take off auto, put this right here. All right, here it is. Always going to happen. Price will break a level of resistance, retest it at support, and give you the technical confirmation for the buy. If there is no technical confirmation, there is no reason to take that buy. Technical confirmation always important. Zimmy. Moving right along, jumping over to EJ. Alright, so I need to make this clear. You have three types of traders within the market, right? You have scalpers, intraday swings, and then you have another type, a fourth type called position traders, right? Scalpers are in and out real quick, usually like hourly, 2 hour in the market. Intradays will never really close out. They won't allow a trade to run into another session. Sometimes they do. Swing trade, which that's the type of trader I am. I prefer to swing. I prefer to take the entire move. And then you have position. As I said, them hold trades for like months on end sometimes. But like you see, Euro JPY and like GJ, GBP, AUD, those are more swing trade pairs. Well, all of these are swing trade pairs. But of lately, you're mainly having intraday moves on Euro USD. Aussie, I had a one swing trade coming on from this level. Gold, mainly intraday trades. But as it relates to Euro JPY, we'll have to look at it from a higher time frame. Right? First things first, this is the trade that is in play right now. You had this supply level, which was tapped about 2 weeks ago. Right? Let's put this as sell. You have this supply level that was tapped right here. That initiated the trade. Right? we had a transition along that area, and then the market started pushing to the downside. This was maintained in the low time frame trend. Market broke it, retested, and started pushing to the south side, right? Now, being able to get into this move after it has happened is just simple breaks of support, future resistance. So being able to get into Euro JPY, had one opportunity right there, got another opportunity right here, and another opportunity right here. But ultimately for Euro JPY, I am looking for this pair to actually break the level at which it's at right now and push down to the daily lows of at the starting, which were created at the starting of the year. Like, as a trader, you have to analyze wicks like this. You see this long random wick right here. This wick was like what, probably 200 and something pips, alright, 377 pips. We can't just frivolously think that the market is going to fall all the rest of this empty space right here. So I have to analyze the wick and find where we have levels of support within the wick. Right? So far, looking at this level, we found one level of support, one level of support, and then we're going to use the other level of support at the tip of the week, at the ending of the week, right? So moving over to where current price action is, we see that we're basically sitting right on top of the H4 level of support. If the market does fail to maintain this level, we definitely will see a big sell-off to the downside. And I always say this, like, if you watch Backtest Fridays coming up, empty space within the market leaves no level of support, so the market can literally free fall 200 pips if this level is broken, right? But to capitalize on a trade like that, if it's bound to happen, well, you just have to sit, wait, be patient, and look for a perfect entry confirmation if you are not already in this trade. It's kind of like a channel right here, so also. But ultimately, you'd probably look for a break of this level, a retest, place your entries somewhere along this area, and then take it to the downside. That's the smarter thing to do. And with that being said, on Euro, we jump over to GBP, JPY, because remember, they both have the same code currency, right? Euro is the base, GBP is the base here, the quotes are JPY, so they will move similar to each other. It's kind of the same situation with GBP, JPY. I prefer to swing this pair. I'm more of a swing trader, as I said earlier, but looking at it from the 4-hour time frame, this is the major trade which is playing out right now. We had a break of this level, a retest of it, and push to the downside. We also had a break of this level along this area and push to the downside. Now, this level that we're looking at all along right here is the same H4 level that we had to search and find on Euro, with being maintained right along there. We had interaction. We see a level of resistance which was broken. Yo, listen to me. Listen to me. Enough people are going to lose money on that trade this week. Believe me when I say that. See? A lot of people are looking at this right now. Break, retest, and anticipating a push to the upside. Like, honestly, don't see it. Me not see that. That not in my book for trading. And if the trade dead it, and like my see it, even if I see it, I still not feel that trading, because I'm heavily bearish on the GBP. I don't feel comfortable investing buys in any form of GBP pair. So if it's not a sell, I'm not taking it. That's just my bias. That's my trade plan. That's how I protect my equity. Right? I'm morely looking for a sell. And the sell is actually there because if you if you look at what's really happening right here, we had a level of support along this region which was broken. Broken support acting as future resistance in a heavily bearish market, we may have a massive sell to the downside. That's the trade I am looking for. And I'm actually in GBP JPY. I actually entered some trades at I think it was towards the ending of London session, starting of New York, at the break of these little levels of support. So retested it. We had this massive push to the downside. So I entered the order somewhere along right here. I think it was, I have a 30 pip stop loss. Right, and I'm looking to take this trade all the way down to the lows of 29. Sorry, the H4 support that was created when you had the so-called flash crash. Sorry, the H1 support that was created when we had the flash crash. Let me show you the H1 support. H1 support is along right here. So that is where I'm looking to ultimately take this GBP JPY trade. Right? That's my trade. 185 pips. I'm not interested in GBP JPY pushing to the upside. Not at all. Right? Moving along, GBP AUD. Yo, guys, I made a fire breakdown for this for my students over the past 2 weeks. A nice swing trade, which played out for 350 plus pips. Let me show you guys. So on the daily, we had a break of this level. It's just simple breaks of support acting as future resistance, to be honest. So we had a break of this level on the H4. When it broke, it came right back to this level and gave this bearish engulfing on lower time frames to capitalize on this trade. Along this region, this level was taken out. We had a massive push to the downside. We have this level right here, which was retested, gave us some low time frame engulfings, entries along that area. We'll put our stops at 45 pips because it's a GBP pair. Hold on, 45. Boom, 45 pips. And then we're looking to take this trade to the next level of support, because when we are selling, our objective is to sell to levels of support. When we are buying, our objective is to buy to levels of resistance. So it actually slammed into the level of support, giving us I'm gonna go back to the low time frame to adjust this. Yeah, giving us about yes, slammed into it for 256 pips. Yeah, it was a nice swing trade. Along another one of the confluences leading up to this trade was we had this form of trend line right here, and nice little break and retest of the trend line. But if you fail to capitalize on this trade along this area, they could have done some many break and retests. Break, retest, another break and retest along right there. Yeah, and that's pretty much it. We probably may have a top of this region, or we had a top of it already. Probably may have a top of this region and push further to the downside. We say have a little ascending little trend line right here. Probably if you have a break of this trend line, a break of this level, we may see GBP, AUD push further to the downside, which does align with what I have for the GBP pairs, because they're heavily bearish along this area. Heavily bearish. But in terms of trades you could have taken on GBP, AUD this week, like if you just put a sell randomly, you'd end up in profit, to be honest. Alright, so that's it for GA. Alright, so somebody asked me to break down NAS 100 USD. Right, so these, let's clear off this watch list right here. You see these three indexes right here, they represent different areas of the United States stock markets, and they are all basically the same, right? So this is the Dow Jones index, compiled of the 30 top performing companies within the United States stock market. The S&P 500 is 500 following top performing companies, and NAS 100, to be honest, I really don't know what it is. But I know it's an index, I know it's trading on the stock market in the US, and I know it's a compilation of 100 companies. But this is the cool part now. They are the same. They are all the same. Let's put them side by side. So this is actually a S&P 500 trade I took on Friday. I posted it on my story. It was a nice trade off at this demand level. But we'll break that down further when I show you these side by side. So look at US 30 and look at S&P 500. Same massive sell-off, same massive buy. Look at NAS 100 and the S&P 500. Same massive sell-off, same massive buy. Basically, all of them are the same. Reason why I can say all of them are the same, because they are all economic health indicators as to the strength of the United States stock market. All of them. Right? So, because I'm not really familiar with US NAS 100, I will do the breakdown on S&P 500, because, as I said, they are all the same. They move the exact same. Make sure you guys see this. So NAS 100, this big dip, massive push, sideways movement here, big push, basically the same, you see me? And yo, to be honest, these pairs, these indexes are very nice to trade. For like intraday trading, very nice. Easy setups, crazy money can make on them. So as I say, I'll break it down using the S&P 500. One thing to take note is that the S&P 500 actually hit its all-time high this week. Like, new numbers right here. We went up to 3,021. All the UX indexes, it hit all-time highs this week, right? So, with that being said, from the 4-hour perspective, looking at trades that we could have took this week, we see this massive impulse area right here, creating demand within the market from this area. With demand being created, like, it's a very easy trade right here. Right down to the M5, we see that we have a certain level which was maintained in the market. That level was right here. It was indeed broken. When the market was broken, it did give us these bullish sentiments. One, turn on this. 1, 2, and 3. These are all bullish indications. On the M5, they look like they're breaking that line, but look how them look on the H1. All wicks out of this area, and a big engulfing candle to the upside. So taking buys anywhere along this area, we could have taken our buys, put our stops below these zones. Guys, by the way, these pairs move very heavy in terms of your order sizes. Like a point 0.10 on S&P 500 is like a standard lot in Forex, and a 0.01 on US 30 is almost like a almost like a standard lot for some pairs in Forex, right? So taking the buy off that level, came all the way up to the H4 level of resistance. We tapped it, and with this being said, the lower time frame levels which were maintaining this not currency pair, this index were broken, right? So we had this level being taken out, transitioning into a downtrend. We had this massive impulse move. When we had this massive impulse move, if we flip to the H4 time frame, we got this zone right here. Like for S&P 500, it's funny because it didn't even tap. But if you go on NAS 100 and look at that same zone, it was tapped perfectly. See that? On S&P 500, it didn't touch it, but on S&P 500 didn't touch it, but NAS 100 touched it. Let's look if US 30 touched it. 4 hour US 30 didn't even have that liquid spike right there. Let's go to the 1 hour. Rejected, broken support acting as resistance. But yeah, all of them are basically the same, to be honest. That's how I see them. But moving forward with NAS 100, we tap the zone. Let's show you the sell. Right, nice and easy sell. Higher high, higher low. Market broke the higher low, gave us this big bearish push. Go down to the M5. You see a lot of entry indicators along this area. Entry along that engulfing. Put our stops above this area. This is a heavy stop loss. I'm not even joking. This is a very heavy stop loss. 329 pips. But using risk management, I probably put my stops above the low high. Me myself, I know that a lot of bearish momentum was coming, because really and truly you had consolidation along this region. Consolidation along certain levels of support and resistance can normally indicate accumulation or people selling off all their major orders that they have. So if you just put a box right here, you see the market jumping up and down between it, break, retest the box, and boom, your entry, and carry it down to the next level of support. Next level of support would have been down this area, so boom, 934 pips, just like that, quick and easy. It's not really 934 pips. We'd call this like 93 pips, and this would be 14 for stop loss. So yeah, a nice risk to reward trade, nice trades. So that's pretty much it for Backtest Fridays episode 8. As I say, I'd be traveling a lot in the next upcoming weeks. I'm probably going like 5 or 6 different states, all over the place. Don't know, working on myself, living my best life, and that's pretty much it. big up on yourself, guys. Trade safe. Also, I'm willing to take on 4 new students in the month of September. So, yo, if you're interested in that, hit me up on my Instagram. Don't know if you never find this video from my Instagram, follow your boy on Instagram at YARDPIPS. You see me? Typo. And also, yo, like this video, subscribe, enjoy the rest of the day. Big up on yourselves.